Welcome back to Gold Rush Reporter, the channel where we decode the truth behind gold, money, and power. I'm your host, your gold analyst, and today we're diving into something that could completely reshape the financial world. The potential revaluation of gold to $24,000 per ounce. James Rickards says $24,000 an ounce. Mike Maloney says $10,000. But what if this isn't just a prediction? What if it's a plan? Imagine, just one executive order from the US president could trigger a chain reaction, flooding trillions into the economy and rewriting the rules of global finance. Let's break this down in simple terms. The US Treasury officially holds gold valued at just $42.22 an ounce on its books. That's the number that's been sitting there since the 1970s, completely outdated. But according to financial experts like Rickards and Maloney, if that gold were to be revalued, meaning its official price increased, it could inject trillions of dollars into the US Treasury without printing a single dollar bill. Here's how it works. The president gives an executive order to the Treasury Secretary, revalue gold. The Treasury then updates the price of gold and issues gold certificates to the Federal Reserve. For every $4,000 increase in gold's official value, the Treasury General Account, which is basically the government's main bank account, gets $1 trillion in new value. So if gold were revalued from $42.22 all the way up to $24,000, the US could theoretically create over $6 trillion in liquidity instantly. No printing, no borrowing, just accounting adjustments backed by gold. It sounds unbelievable, but it's been done before. Back in 1933, President Roosevelt revalued gold from $20.67 to $35 an ounce. That move alone devalued the US dollar by about 40% and helped pull America out of the Great Depression. Later, in 1971, President Nixon closed the gold window, ending the gold standard completely. Each time, these moves changed the world financial order. Now, the big question is, could history be repeating itself? Experts like Andy Schechtman, CEO of Miles Franklin Precious Metals, suggest this isn't a conspiracy theory. It's actual monetary policy. The idea is to devalue the dollar intentionally to fix deeper problems in the economy, like the Triffin dilemma, where being the world's reserve currency makes US manufacturing too expensive and hollowed out. By revaluing gold, the government would be weakening the dollar, making US exports cheaper, boosting manufacturing, and effectively resetting the system. Central banks around the world have been buying gold at record levels, and if the US leads this shift, they all benefit too. Gold would suddenly become the anchor of a new monetary order, and the dollar's dominance could begin to fade. In simple words, the world may soon wake up to a financial reawakening where gold becomes the ultimate tool to restore balance. Not just a safe haven anymore, but the very foundation of a new economic era. So here's my question to you. If gold really hits $24,000, what do you think happens first? A dollar collapse or a global reset? Share your thoughts in the comments below, and before we move forward to the next part, don't forget to subscribe to Gold Rush Reporter and hit that bell icon so you don't miss the coming breakdown. Because in part 2, we'll uncover why the US might actually want to devalue its own currency and how this strategy could change the entire balance of global trade. The idea of the US government intentionally devaluing its own currency might sound shocking, but when you look deeper, it starts to make strategic sense. This is not about failure, it's about survival. Economic survival. America's role as the world's reserve currency has brought both privilege and pain. It gave the country unmatched global power, but it also created an impossible dilemma. The stronger the dollar becomes, the weaker America's manufacturing base gets. This is known as Triffin's dilemma, and it's the silent reason behind the growing interest in gold revaluation. Vice President Vance even mentioned this issue officially on White House letterhead. He said that the US cannot continue to function as the world's reserve currency and maintain a healthy domestic economy at the same time. The world needs dollars for trade, to buy oil, commodities, and for international loans. But to provide those dollars, the US has to export them. Over time, that means America runs a constant trade deficit while other countries grow dependent on the dollar system. The result? Cheap goods in American stores, but empty factories across the country. This is why a strong dollar is both a blessing and a curse. It gives Americans purchasing power abroad, but destroys the competitiveness of American products at home. Factories close, jobs disappear, and the economy becomes more about consumption than production. The US essentially became a nation that buys instead of builds, and the elite policymakers know it. So the conversation now is not about protecting the dollar's dominance, but rather how to gracefully step back from it. Stephen Meering, the architect of the so-called Mar-a-Lago Accord, and now an advisor at the Federal Reserve, has been openly supporting this strategy. His plan focuses on devaluing the dollar to reshore manufacturing, bringing production back to American soil. A cheaper dollar makes exports more attractive and imports more expensive, which could restore balance to the economy. Even former President Trump echoed this view, saying a strong dollar might sound patriotic, but it hurts US manufacturing and tourism. You can't sell your products to the world if your currency is too expensive. Now let's connect this to the massive flow of gold entering the United States since last November. Billions of dollars worth of gold have quietly been imported, and no one can explain who's buying it. It's not retail investors. It's not just big funds. Many analysts believe it's the Exchange Stabilization Fund, operating under the Treasury Department, quietly preparing for a shift in the monetary system. And here's where things get interesting. The Treasury Secretary, who oversees that fund, is known to be a gold advocate. He has publicly expressed interest in a new Bretton Woods-style monetary order where gold once again plays a role. On the US balance sheet, gold is still recorded at $42.22 per ounce, a number that hasn't been updated for decades. If that value were adjusted to reflect today's market price, or even a higher revalued one, the US would instantly gain trillions in paper wealth. That's how a revaluation could fund government spending without printing new dollars or increasing national debt. It's a financial reset without calling it one. So, when you hear experts like Andy Schechtman and Judy Shelton talking about reconnecting gold to the treasury market or even issuing new gold-backed treasuries, it's not speculation, it's preparation. If such a move happens, it won't just strengthen America's financial position. It will redefine global trust in money itself. The US isn't looking to default. It's looking to restructure. To trade the illusion of endless fiat strength for the tangible backing of real assets. In other words, to rebuild confidence before it collapses. Before we move on, tell me what you think. Is this smart long-term strategy or financial suicide? Comment your thoughts below. And if you're new here, make sure to subscribe to Gold Rush Reporter and hit that bell icon. In the next part, we'll explore how this hidden gold accumulation ties into a much bigger picture, the global race to reset the monetary system. While the US quietly prepares its own strategy, the rest of the world isn't standing still. Something massive is happening across global markets, a silent race to accumulate gold. The BRICS nations, Brazil, Russia, India, China, and South Africa, have been leading this move, and their actions reveal a simple truth. The world is losing trust in paper money. Gold, once considered old-fashioned, is now being reintroduced as the foundation of global trade. What started as a defensive play has now become a coordinated financial revolution. Central banks worldwide have been buying record amounts of gold since 2019. It's not just about diversifying reserves anymore. It's about preparing for a world beyond the US dollar. Countries are settling more and more trade in their own local currencies, and when the accounts are finally balanced, they use gold to settle the difference. In other words, gold is becoming the neutral bridge between nations, free from political influence and sanctions. This trend is accelerating through platforms like the BRICS Enbridge network, which allows cross-border trade to bypass the SWIFT system entirely. Even Saudi Arabia, once the cornerstone of the petrodollar system, has started to shift. It's now building gold vaults under the Belt and Road Initiative, partnering with China to store metal in multiple global locations. These multi-jurisdictional vaults are crucial. They make it harder for any one government, like the US or the UK, to freeze assets or block access, as happened to countries like Venezuela. Gold is being physically moved out of Western vaults, from London, New York, and Zurich, into Asia and the Middle East. That's not random. It's a rebalancing of power. But here's where the story loops back to the US. All that gold coming into America, billions of dollars worth every month, isn't just a coincidence. Andy Schechtman and other analysts believe this gold is being accumulated under the Exchange Stabilization Fund, controlled by the Treasury. This fund operates with little congressional oversight and is often used for national security level financial operations. If that's true, then America might already be preparing for a gold-linked system behind the scenes, possibly revaluing its holdings before making it public. Why does this matter? Because whoever controls the gold controls the reset. When the global system eventually shifts away from the dollar, the new framework will rely on tangible reserves, not promises or debt. If the US holds the largest gold reserves and revalues them upward, it can instantly clean its balance sheet and regain financial leverage, without defaulting or losing credibility. It's the ultimate quiet power move. This isn't just theory. Look at the numbers. Gold prices have been quietly stair-stepping higher for years, up 40% last year and another 50% this year. It's moving faster than most people realize, yet it's not making headlines because the focus is on tech stocks and crypto. But while everyone's chasing digital assets, the institutions are buying physical ones. That's how real wealth behaves before a system reset. It hides in plain sight. Now think about this. If the US revalues gold to $24,000 per ounce, as James Rickards predicts, it doesn't just benefit America. Every central bank holding gold instantly becomes richer. It's a global debt rebalancing mechanism disguised as a simple price change. The paper currencies lose value, but the gold-based assets gain, and suddenly those who were preparing early emerge on top. So, what we're seeing right now, the gold flows, the vault expansions, the BRICS coordination, it's not random. It's the groundwork for a new monetary alignment, where gold replaces trust as the foundation of trade. The era of fiat dominance is slowly fading, and gold is quietly taking back its throne. Before we move to the next part, think about this. If gold truly becomes the center of the new system, what happens to your savings, your debt, and your investments? Comment your thoughts below, and don't forget to subscribe to Gold Rush Reporter. In part 4, we'll break down how Wall Street giants, the same institutions that once mocked gold, are now positioning themselves for this new era. For years, Wall Street laughed at gold. They called it a relic, a dead asset, something only survivalists or old-school investors would bother with. But look closer today. The same institutions that dismissed it are quietly loading up. Big banks, hedge funds, and sovereign wealth managers are all making moves behind closed doors. What does that tell us? It tells us they know what's coming, even if they won't admit it publicly. When the financial elite starts preparing for a gold-backed world, that's not coincidence. That's strategy. Let's start with the data. Major investment banks have been increasing their exposure to physical gold through ETFs and direct holdings. Even more interesting, some of them are taking delivery. That means they're not just speculating on price, they're securing real metal. JP Morgan Chase, for example, owns one of the largest private gold vaults in the world, storing bullion not just for clients, but also for itself. Citigroup, Morgan Stanley, and Goldman Sachs have all issued bullish reports on gold, with targets reaching as high as $3,500 to $5,000 per ounce in the next phase. These aren't predictions for small investors. They're signals of institutional positioning. You might ask, why now? Because Wall Street understands the math. The global debt burden has exploded past $300 trillion. And the only realistic way to rebalance it is through inflation or currency devaluation. Both outcomes favor hard assets, especially gold. When you can't pay your debts, you devalue your currency. And when that happens, paper loses value. But gold doesn't. It simply reprices itself in the new system. In that scenario, gold isn't just a hedge. It becomes the new benchmark of trust. Look at the trading patterns too. Every time gold dips below key levels, massive institutional buying steps in. Central banks in the East buy for stability. Hedge funds in the West buy for profit. The alignment between both sides is rare, and it tells us the market is shifting from speculation to preservation. Big money isn't chasing returns anymore. It's looking for safety. That's the quiet signal before every major monetary shift in history. Now here's where it gets more revealing. Large corporations, not just banks, are also starting to hedge their balance sheets with gold. Some energy firms and shipping companies are even exploring settlement options using gold-backed contracts. Why? Because if the dollar system wobbles, trade doesn't stop. It simply finds another medium. Gold is that medium. It's the bridge that keeps global commerce alive when paper trust collapses. Even the digital world is catching on. New blockchain projects are linking their tokens directly to physical gold stored in private vaults. These projects aren't about crypto speculation. They're about merging modern technology with ancient value. Think about it. Decentralized finance backed by the oldest form of money. That's not just innovation, that's a safety net for the next financial era. So what does this mean for everyday investors like us? It means the smart money is moving quietly before the crowd notices. When the headlines finally say, gold surges past $5,000, it'll be too late. The institutions will already be sitting on massive reserves, waiting for the revaluation to make them even richer. This is why understanding timing is crucial. Not in trading, but in positioning. The reset isn't a future event. It's a process already unfolding right under our noses. And let's not forget digital assets. Many believe cryptocurrencies will coexist with gold in the future system, but only those backed by real metal will survive. Governments are already planning central bank digital currencies, CBDCs, and when those launch, they'll likely need a tangible asset to anchor trust. That's where gold could re-enter the picture, not as coins or bars in your hand, but as digital certificates linked to government reserves. This combination of blockchain and bullion could define the next era of money. Now here's something crucial. Every reset comes with opportunity. Those who understand what's happening can position early by diversifying into physical gold, silver, or even select mining stocks. But timing matters. Once the revaluation happens, it's too late to react. The door closes and the system recalibrates. That's why awareness is your first defense and action is your best strategy. So as this transition unfolds, think about where your value sits. Is it in digits controlled by banks or in assets that exist outside the system? The next few years could rewrite financial history, and you get to decide whether you're an observer or a participant. Before we move to the final part, drop your opinion in the comments. Do you believe this revaluation is already in motion? And if it is, what's your personal strategy to protect your wealth? Don't forget to subscribe to Gold Rush Reporter and hit that bell icon, because in part 6, we'll wrap this series with a complete outlook on what happens after the reset and how the world economy could look under a new gold-backed order. So, we've reached the final chapter of this story, the part where the reset is no longer a theory, but a new reality. Imagine waking up one morning to headlines saying, US Treasury revalues gold. New price, $24,000 per ounce. The markets would go silent for a moment. Banks would freeze transactions. Currencies would adjust. And then, just like that, the entire structure of global finance would look different. Not destroyed, not chaotic, just transformed. Because when gold is revalued, money itself changes meaning. The first days after such an announcement would feel uncertain. Stock markets would likely drop as investors scramble to understand what's real value and what's inflated illusion. But within weeks, things would stabilize, and a new financial order would start taking shape. The US Treasury, now backed by trillions in newly valued gold, would suddenly look stronger than ever. Debt to GDP ratios would shrink overnight, not because debt disappeared, but because the value of national assets expanded dramatically. It would be a clean slate disguised as a simple accounting adjustment. Meanwhile, other nations would follow. Central banks around the world would reprice their gold reserves to match the US rate, triggering an instant balance sheet reset. The domino effect would stretch from Europe to Asia as every economy recalculates its currency strength based on tangible reserves. For ordinary people, this means two things. Prices will rise fast, but so will the value of real assets. Gold, silver, and even commodity-backed investments would surge in purchasing power. Cash, on the other hand, would lose its old privilege. Money would return to its roots. A store of value, not a symbol of trust. And here's something that's rarely discussed. With gold back in the picture, central bank digital currencies, CBDCs, would finally have credibility. Governments could link their digital tokens to physical gold reserves, creating a hybrid system. Digital convenience with real-world backing. That would restore faith in money for a generation raised in inflation and debt. But it would also come with control, programmable money, trackable transactions, and limited privacy. The reset isn't just about economics, it's about power. And like every major transition in history, there will be winners and losers. In this new era, the winners are those who understand value before it's priced in. People who've positioned themselves in gold, silver, or other scarce assets will stand on solid ground, while everything else shifts beneath them. The losers, unfortunately, will be those who assumed the system would always stay the same. Those who trusted paper promises in an age returning to hard truth. This is the world we're heading toward. A rebalanced, revalued, and perhaps more honest economy. One that runs not on endless credit, but on measurable worth. And maybe, just maybe, this return to gold isn't a step backward, but a necessary correction. Because no empire, no currency, and no digital token can outlast the law of real value. So as we close this series, remember, the signs aren't coming. They're already here. Central banks are buying, gold is moving, and quiet policy changes are happening behind the scenes. The time to prepare isn't tomorrow. It's now. Thank you for staying till the end of this special report. If this breakdown opened your eyes, make sure you hit that like button and share it with someone who still believes the old system is unshakable. Subscribe to Gold Rush Reporter and tap the bell icon, because here we don't chase rumors, we decode reality. I'm your host, your gold analyst, and this was Gold Rush Reporter, where truth is value and value never lies. Stay sharp, stay informed, and as always, keep your eyes on the gold.